Welcome to 7 Investing Now, a show that teaches you how to take a long-term view on investing by better understanding what's happening in the market now.
Good afternoon, 7 investors, and welcome to the Friday edition of 7 Investing Now. My name, of course, is Daniel Brooksline. I'm the host of the program. I'm being joined today by my friend and colleague, Matt Cochran. Matt, we are going to talk Domino's earnings, Chipotle's earnings. We're even going to talk a little bit about SHAK at the end. But before we do that, I've got a question for you.
Yes.
What is your fast food guilty pleasure?
For the family, it's going to definitely be Domino's. If it's just myself, any good burger joint, I'm down for. Like, so that could be Shake Shack. That could be like Five Guys. There's a few others in our area. Habit Burger is really good. So any really good burger joint is I'm down for at almost any time.
Take me to a Boston area roast beef house. That is a unique to Boston thing. Or again, a South Shore of Boston steak and cheese, which is a completely unique thing. But if it has to be a chain, I haven't done this in decades maybe, but Kentucky Fried Chicken. It's like weird, scrawny chicken, but somehow those 11 herbs and spices, you know, the Colonel has done it right. So with that, Matt,
hold on.
Okay, I'll let you chime in
the
there.
Fried chicken, I used to love it, but I don't know. We tried Popeyes not too long ago, which I used to love Popeyes, and it just didn't do it for me anymore. I don't know. It was too and I'm not the healthiest guy around, but it was just like so greasy. Like even for me, I'm like, I don't know. Like I felt bad eating it.
It's been a very long time. As the father of a new Wendy's employee, I will have to pretend I like Wendy's, though maybe Wendy's, you should get your hiring system down. The app not connected to the store, the manager's not connected to any of those systems. It is basically harder to work at Wendy's, which is desperate for employees, than it is to get hired by like the NSA. Like this is not a great system. And I only bring that up because I think in the fast food world, Chipotle and Domino's both show that the winners are going to win. That when you have an advantage of business, that also gives you an advantage of investment, an advantage of infrastructure. And both of these companies have heavily invested in infrastructure. We would like your fast food comments. If you have fast food guilty pleasures you want to share, if you have recommendations for things we should try, I'll give a little shout out to Shade's Rib Shack, which Matt and I regularly visit, which I think is a regional chain. I've seen some other ones.
There's some in South Carolina.
Yeah, I drove by a bunch.
We're around,
so
yeah.
I drove through all of South Carolina last week and kept seeing them on rest stops, Georgia as well. So shout out to Shade's Rib Shack because they never have more than 4 customers. So it's not bad and it's cheap. So I really, really hope they do better. But we would love your questions and comments. But Matt, as we get into this, why don't you give us the 10,000 foot overview of how Domino's did in the most recent quarter?
All right, so the headline numbers, just real quick, great numbers. Everybody was worried. Domino's had such a great second and third quarters last year because of COVID. Nobody was going out, and they just they nailed it last year. The same store sales were up like 17% last year, and everybody was worried. Is Domino's same store sales streak, growth streak going to end? And it didn't. Same store sales in the U.S. were up 3.5%. Over on a 2-year basis now, same-store sales are up almost 20%. So that's 41 straight quarters for U.S. Domino's locations of same-store sales growth. Internationally, same-store sales jumped 13.9%. That's 15.2% over 2 years. That makes it 110 consecutive quarters of same-store sales growth for international Domino's locations. So those streaks are intact. Revenue came in at a little over $1 billion. That's more than was expected. It was up double digits. EPS came in at $3.12. Again, that was more than what was expected. So Domino's, if you want to look at just the high view, great quarter.
So Matt, let's talk about those streaks because I feel like they have to end at some point. But do you feel, and this is anecdotal, because I think it's technology driven. I think as their tech keeps getting better and better, if you don't have to call a Domino's to order, you don't feel bad about adding pepperoni, which costs extra, or double pepperoni, or getting some cinnamon bread stick cheese monstrosity or whatever they sell, or God forbid, adding a Mountain Dew to your order. But are they also, do you think, attracting new customers? Because I do feel like in the pandemic, Domino's like was kind of the sure thing. Like everybody else's delivery was dicey. And if you place a Domino's order, and I've never done it for myself, but I've sent some of my son's friends Domino's during the pandemic, it always shows up.
Yeah. So digital sales, digital channels was represented 75% of Domino's sales, which is just, it's phenomenal. And when they were asked about that, they're like, we wanted to go higher. And they called out China, which now has 400 Domino's locations. And they said in China, 19 out of 20 orders are from digital channels. And that's their goal for everywhere. They want digital channels to go up. It's so easy to order Domino's. I don't know how many new customers they're getting, but they have 27 million loyalty reward members. So when you can tailor special offers to 27 million customers, that's pretty good. And they have several more customers in their database that aren't part of their loyalty members. So they can reach repeat customers a lot. They make it so easy to order. So again, 75% of sales on digital channels. I mean, that's fantastic. That gives them such an advantage over we talked about McDonald's a few weeks ago, Dan. They just started a loyalty program. Like Domino's has a 27 million member head start on McDonald's.
Yeah, and about an 8 million lead over Starbucks, though Starbucks also, like Domino's, has millions of email addresses for people who used its Wi-Fi that have not opted into the loyalty program. Why is this important? Once they have my information, it becomes incredibly easy to order. So if I'm going to get a pizza, am I going to pick up the phone and call my local place and go get it, even if it's 50% better? Or am I just going to be like, geez, it's late, I want pizza, like just send it. It's inexpensive, it's easy, it's good. That's a big advantage. I'm bringing this up because we're going to talk about how Chipotle isn't quite there yet a little bit. Matt, do you think the secret sauce for Domino's is that they're always on the cutting edge of invention? And we've talked about the commercial. I think the current commercial is misleading. They're testing driverless delivery. They have no intention of ever having driverless delivery being an important part of their service. The Neuro vehicles they're testing that fit 2 medium pizzas and only bring them to the street. This is like when they tested having reindeer deliver pizza, but that's just the false front. Their actual innovation is things like how they produce the pizza, how they get more efficient. The pizza tracker is actually owned by a Domino's. Nobody else can do that type of showing you the progress of your order without licensing it from Domino's. And I have no idea if they'll ever be willing to license it. So Matt, it's clearly not food. Is it the endless tech spend that's keeping them at the head of the pack?
It's not even, I mean, they do spend a lot on technology, right? But it's not like this giant money pit for them. They seem pretty smart with their investments in technology. I would say more than producing the pizza, it's how people order. So we just talked about 75% of sales come from digital channels. Well, like that makes it higher margin. So 20 years ago, Dan, I want to order Domino's for my family. Hello, this is Domino's. Would I take your order? I want 2 large pizzas. Oh, hold on. And they go to the next customer. Oh, this Domino's, can you hold? They come back to me. All right, you want 1 large pepperoni that's thin crust? They don't have to do that anymore. It's just all digital. So now you don't have people answering phones. You don't have people like even really, you only have 25% of people like coming in and saying like, I want this and this, ordering in front of a cashier. It's all digital. So they just get their orders. They don't need anyone taking these orders. And going back to your prior question about like their new customers, they're doing a lot in carryout. Sam, I think we have a graphic for this about their market share in the pizza market. So look, they have 22% of the quick service restaurant pizza market share. They have 36% share in delivery, but in carryout, they only have 15% of carryout. So this is what they're talking about, like where they really want to capture new customers. There's a few ways they're doing that. So first of all, it's called fortressing. So that entails like increasing their store presence in existing markets to provide better service to customers by shrinking the geographic coverage per store. So like, in other words, they want to have more stores. So if a Domino's now in my home market covers like a 2 or 3 or 4 mile radius, they want to shrink that to a 2 mile radius, or and that makes it much more convenient to pick up. And they think that's a great way to order carry out. They have curbside pickup now, and when you go and you check in at the restaurant, you've already ordered on the app or on a digital channel. When you go in, you check in, and a 2-minute timer starts. And as soon as that timer ends, if they have not brought out your pizza by the time that timer ends, you get a free pizza on your next order. So just different ways like that. And I put that on Twitter a few weeks ago, and someone's like, well, Pizza Hut does the same thing with the curbside pickup. Papa John's does something similar. Nobody has the 2-minute timer with that kind of offer. And it's these little innovations that Domino's has that just puts them up above everyone else.
And nobody has the app. So you can have a set order in your Domino's app where if Matt knows for his family, they always get the same thing every time. He can do that in basically one click. And they also have a very visual app. And I know this sounds silly, but it's easier to order like a half pepperoni, half broccoli if you could visualize it. I don't want my wife's broccoli touching my pepperoni. I think that's a fair thing to say. But Matt, they do have one major hurdle. And Max Lucas, we see your question. We're going to take it later on. We would love questions and comments about Domino's, about Chipotle, about the fast food industry at large. If you want to ask me about the Noid, I am a big fan. Feel free to go ahead. But Matt, what is the major hurdle facing Domino's right now?
Well, it's got to be labor, right? And I know you know this, Dan, but they're talking about this is a tough market. And they've mentioned this for several quarters now. Everybody is having a hard time hiring.
Yeah, and the challenge is Domino's has traditionally not been a top tier, on the hourly payment schedule. So they have been looking at encouraging franchisees to pay more, selectively supporting wages in some markets. So it's something the company is aware of. I also think it's part of why you see this push to digital. You mentioned if 75% of the orders don't involve me picking up a phone or taking your order at the counter, that's labor that's not needed. And we're actually seeing this in Starbucks, which is a much more labor-intensive model. Starbucks has worked really hard to take as much labor out of everything except producing beverages as possible. And I really think that's where Domino's going. There is another hurdle here, but it's a short one. They're facing pandemic-related delays on getting building permits approved. Now, all of you who couldn't go to court to get papers filed or whatever it is, that's having an impact on the corporate level. I only mention this because going forward, I think it's not that relevant if you see a quarter or two where Domino's doesn't open the amount of stores you'd expect them to, because I do think you then see the next quarter where all of a sudden they open 500 stores instead of 40 the previous quarter. So I think we're going to see some lumpy results. Matt, I'll give you the last word before we move.
Well, yeah, so I wanted to be worried too much about that stuff. As far as labor goes, you're right. I think they even mentioned in higher end markets, like they were having a harder time hiring people. And probably just speaks to the demographics of that area. I would say, like, Sam, if we could go back, we have a slide about their franchisees. And 95%, more than 95% of U.S. franchisees started off as drivers, pizza makers, or other in-store workers. So why is that important? Because they can take a quality potential employee and give them like opportunity. And opportunity can be a huge selling point when you're trying to hire. And you say, look, you work here and you can own your own store. Now, go back, Sam, to the market share graphic we had from their investor this is from investor. Both of these slides were from investor presentations earlier this year. 48%, if you look at the picture on the left, 48% of the quick service restaurant pizza market share in 2020 was from independents, like just these one-offs or like a really small chains in certain regions. 48%. They cannot offer employees that same opportunity. They can't say, oh, look, we have thousands of stores and we have a great franchisees model. And then one day, if you work here, you'll have that opportunity. So that is an advantage Domino's has when it comes to recruiting talent.
Matt, is their stock getting expensive? This has been a company on an unprecedented roll. Is that something we should be worried about, the actual valuation and share price here?
Shares are always expensive in Domino's. So like, it's one of those great companies. They're going to be expensive. We have a chart from this from our friends at Y Charts, like just showing their PE ratio over the years. Like, look, and right now after the stock price has gone up incredibly the last 4 or 5 months, and you can see like where it was like considerably below its 5-year average. Now it's considerably higher than its 5-year average. I don't know if this would be like my favorite time to like, quote unquote, like back up the truck on Domino shares. But I own Domino's and I'm not selling any shares based on valuation.
We're going to move to talking about Chipotle. We see some questions and comments. We would love more questions and comments. Say hello Tell us what your fast food guilty pleasure it is, whatever it is you would like to do. So here's what I'm going to do here, Matt. I'm going to set the table, and then I'm going to have you ask me the questions in the document because I know Chipotle a little bit better than you do. So what happened in the most recent quarter? Same store sales were up 31.2%. That's a monster number, but it is a little bit relative to the pandemic. They had some blips for the year ago number, lockdowns, some closures. So it's a great number, but it's not a typical number. Don't take it with a bit of salt here. They earned $7.46 per share. That topped estimates. I am never a big fan of estimates, but still, that is a very big quarterly earnings per share number. They expect same-store sales growth of low to mid double digits in the third quarter. That is ridiculously impressive as well. Digital sales jumped 10.5%, making up 48.5% of the company's quarterly sales. That's stunning. That's up from a very minimal amount pre-pandemic. These are really big numbers, and they are at 23 million loyalty members. That is impressive as well because, one, higher than Starbucks, lower than Domino's, but still a very high number. They came very late to the party. This was a company that did not believe it needed a loyalty program. It needed to have even an app for a long time. So getting to 23 million shows you the incredible connection Chipotle has with its customers. But Matt, I'll let you take over. Go ahead.
Well, just a real quick comment on that, Dan. Like, I love how they use their digital channels too. They're talking about like making quesadillas like a digital exclusive product. So you can only order that digitally. And they talk about like they know because of the data they have, like if you like pork more than chicken. So when they advertise, send you an offer on the app, like about their new quesadilla offering or whatever, they're going to talk to you about hey, try our new pork quesadilla. And if you like steak, they're going to talk about like the new steak quesadilla. And I love how they individually tailor those options to their customers. And, like the two similarities, Dan, you can't help but notice, like digital sales and customer rewards. I think Chipotle and Domino's have the most loyalty members of any two other restaurants, in the industry. And and digital sales, 50% for Chipotle, 75% for Domino's. I mean, they're both of those are higher margin orders when you get that.
So there's also a method to the madness here. So you mentioned quesadillas being a digital only item. If you walk up and order a quesadilla, they'll make it for you. I've never seen they're never going to turn down the business. But the reason they're pushing those as digital only is because they take time. Most of their items just get assembled. They don't get heated. The quesadilla has to go into, I haven't seen it, I'm going to assume it's a press, and get melted. So if they know about that ahead of time and they tell you your order is going to be ready in 7 minutes, then you have an expectation they have the time to do it, as opposed to if I order it in line and it takes, say, 90 seconds in the warmer, that's 90 seconds. The entire line is getting backed up. And one of the negatives about Chipotle before they started with these digital initiatives is that you'd have two people in front of you at line at Chipotle and it would take 30 minutes. That doesn't happen nearly as much because putting orders through the digital system. So my first question to myself here is what has Chipotle gotten right? I'll let Matt ask the next question. What they've gotten right is a very major thing. They put a second make line in all of that stores. What does that mean? The make line is when you go in and you see all the little stations with the little bins of meat and the little things of guacamole and cheese and salsas and whatever it is. They have a whole second one of those in the back. So when I place my digital order, they can have the guy in the front make the order for the people who are physically there and speed that along. And someone else is making them for me and the order they came in, for the people ordering in the Chipotle. And that is an incredibly efficient process. So imagine a chain saying about 2 years ago, maybe 3 years ago, we're going to double our production capacity in every restaurant. And they're basically there now. And that's paying off incredibly. Matt, I'll let you go to the next question here on the list.
Well, okay, we talked about what they're doing right, Dan. Are they doing anything wrong?
Yeah. So they're going to fix this. And I liken it to when Walmart first went to 2-day delivery, and it was a giant mess. You'd order 5 items. 3 of them would come in separate boxes. 1 of them wouldn't show up. The 5th one, it would tell you to go pick it up in the store. Like, it was a disaster. And that eventually sorted itself out. They basically announced something they weren't ready to do. And that's kind of how the Chipotle works. So most people are used to drive-through, where you drive up to a window, order something, and then go get it. Well, the Chipotle works that you order it digitally and then drive through and pick it up. The problem is a significant amount of customers don't know that, so they drive through and get to the front and place an order. That is a choke point. That is a problem. The method they use even when you get there to claim your order is a little wonky because all the bags look the same and they're doing such a high volume. They haven't figured out how to alphabetically segregate things yet. So yes, they're doing that wrong, and I think it's going to take some time. I also think they're very slow on new menu innovation. And they were zero on new menu innovation before Brian Niccol took over. And I really expected once he took over and put in a very strong system of vetting new items, I really thought we would at least quarterly get something exciting from them. I've said it before, bring chorizo back. I thought it was a great product, but they were testing some dessert items. There's a lot of things. Really all they've introduced is a slightly different beef and queso, and their queso has still not, in my opinion, hit it 100%.
Well, so they talked about that on the conference call. They called out cauliflower rice as an example. They said that brought in some customers. They're trying out brisket now, which is past the testing stage, and they said that's going to be rolled out to more locations. Niccol said he's aiming for 2 to 3 menu innovations a year. Dan, my question would be like, if they did more than that, would that mess up their efficiency? Like on their ordering line, would that mess them up?
I think they have to be very clever about it. And Mexican food is largely similar items in different packages. A burrito, a taco, a bowl, those all use primarily the same ingredients. So it's figuring out things like how can we use our tortilla chips unsalted to make a dessert? How could we offer a nacho product that uses all the items we have here and our queso? Like, it seems logical to me that chips plus meat plus whatever toppings you want plus queso equals nachos, and that would be an easy, low-hanging thing. I think they could do some beverage innovation. They have markets where they have liquor licenses, and they have beer, and they have margaritas and things like that. They do have interesting sodas in some place, but I think they could do like a featured beverage with their partners and have more fun. Taco Bell does a really good job with that, even though I am not particularly a fan of the latest Mountain Dew Freeze or whatever it might be.
Doritos, tacos, or whatever. Yeah.
Yeah, this is a little bit of a nitpick. The other thing I would love is, could my food be hot? Like, I know that's not how their system is set up, but part of the reason I wouldn't order a quesadilla because I don't eat flour tortillas. But boy, do I wish they could put my corn tortilla through that press, because I actually like getting Chipotle delivered because I can throw it in the microwave for 15 seconds and it's hot and and that it doesn't look great, but I think it's actually perfect there.
So Dan,
yeah, go ahead.
Let me ask you a question. Is breakfast like inevitable here? Would that be a winning move for Chipotle? Like a breakfast burrito, like something like that?
So I find it frustrating that they don't have breakfast, because I look at this as a retail operator. We've talked about it. I ran a retail store, and when I ran the retail store, what did I try to do? I pay the same amount on the building, more or less, whether we're open or we're closed. A slightly incremental heating or cooling cost and obviously some labor cost. So if we opened at 9 in the morning and didn't have any customers till 11, I would be like, okay, can I have mommy and me story time where I sell the moms coffee, the kids get to read a book, the parents maybe buy a book, they buy some incremental things, and I only have to have one person in the store for that to happen, in addition to like a cashier running the thing. So how can I maximize it? Well, I would look and say, okay, I have the Chipotle building. I have the app. I have the drive-through. A breakfast burrito starts with the burrito. I have burritos. So what do I need? I need eggs. Okay, that's a new ingredient. I need chorizo. I need bacon. So some things that are not normally on the menu. But you know what I don't need? I don't need chicken. I don't need pork. So see, in the morning, I could have those things. I think it's such a simple ask. I also think there's some Mexican breakfast items they could do that go beyond the breakfast burrito, that they could really do some interesting, innovative things, and it wouldn't be expensive. And again, they're already there. And, I know I'm looking forward to trying Wendy's breakfast. I haven't done it. It looks way better than McDonald's breakfast. But if you told me tomorrow Chipotle had breakfast, even just customizable breakfast burritos or maybe arepas or something else, like, it'd be like the Mexican breakfast bar on a Carnival cruise ship. I'd be happy to go there. Matt, do you think they do well with breakfast?
So let me ask a bigger question about breakfast, because you put this in the notes and I was thinking about it, and I was like, Domino should make a breakfast pizza. I was thinking like something like that. Is breakfast though a game of diminishing returns? Like, so McDonald's, I don't know, but I feel like anecdotally, just McDonald's was the first like big fast food restaurant to really roll out breakfast. And like, it was huge for them because nobody else was doing it. And then Burger King started doing it, and then Chick-Fil-A and Wendy's and Taco Bell and whoever else is now everyone's doing breakfast. There's only so much fast food breakfast. I feel like, you have Starbucks, you have Dunkin', obviously.
You have Taco Bell.
Yeah. So now everyone's doing it. Is there room for everybody to be offering breakfast products and for it to be as attractive as it is now or as it used to be?
So Wendy's has shown there's room in breakfast if you execute well. I would assume Wendy's is taking share from Burger King and McDonald's. Not that I actually think some of the McDonald's products are pretty well executed. And as much as I love the sandwich, it just looks terrible. And they don't do a great job executing it at Burger King. Chick-fil-A's breakfast is awful. Chick-fil-A's breakfast, I mean, I'm sure the chicken biscuit's good, but like their breakfast bowls, they're sad looking, they're small, the eggs aren't great, the stuff in it's not great. It doesn't live up to Chick-fil-A or the reputation of Chick-fil-A. When I look at Wendy's breakfast, I go, wow, that's a much fresher looking take on a breakfast. Like the Breakfast Baconator, and Max Lucas shares that Wendy's breakfast is incredible. The Breakfast Baconator looks delicious. It's health reasons that I have not succumbed. The Frosted-Chino, I've had many times, not necessarily as a breakfast item, is a pretty cool snack. So I think if Chipotle really leaned into how can we do a high quality Chipotle breakfast, and also how can we have alternatives? We know Chipotle is not always healthy. You can order a very unhealthy meal at Chipotle, but you could order a healthy meal if you want to. And I think Chipotle could fill that niche. The biggest problem, and the reason I don't think they're going to do it anytime soon, is we don't know what breakfast hours are. And I think this has probably hurt McDonald's. In the old days, when people commuted to work, breakfast was a normal hours. Now, Matt, you work set hours. You probably, sometimes get a coffee or whatever and are working a regular schedule. If you're like a teacher, you work normal hours. If you're an office worker who no longer goes to the office, breakfast might be noon. So like you really have to struggle with when are you going to offer breakfast? Or do you have to do like Wawa where breakfast has set hours where they put it out, but you can also order breakfast items the rest of the day. I think it's a giant mistake that McDonald's got rid of its 24-hour breakfast menu or its all-day breakfast menu. I know franchisees didn't like it, and McDonald's is in constant negotiations with its franchisees. But if it's 3 o'clock and I haven't eaten yet, boy, a McGriddle would be great. And I think Chipotle has some room to play with this, where they could, really just adding eggs and bacon to the regular menu gives them an enormous amount of optionality with all-day breakfast or breakfast. And obviously there's some things you could do with tortilla chips, you could do with cinnamon-based desserts. I think there are a lot of things. I also think Chipotle has done nothing with coffee. And if you went with a true Mexican coffee experience, you might be able to capture a part of the coffee market that no one in the US is trying to do. No one is doing Mexican coffee. Which is a unique item compared to how certainly no one's doing Mexican hot chocolate, which I think would be a big sale. Starbucks has dabbled in it on occasion. So would you go there, Matt? Would you eat a Chipotle breakfast?
Maybe. I don't know. I would try it out. A steak, egg and cheese burrito sounds pretty good, but probably. Dan, there was a few comments they made about labor, actually, that I would like to go through if we have time for that. I thought it was
absolutely. I have real thoughts here, but ask the question and I'll answer.
Well, sure. Well, I was just going to say, they pointed out a lot of cool things in their conference call. They had a nationwide career day not too long ago. They have degree programs. 90% of manager roles are filled from within, which reminds me of that stat we shared from Domino's, where 95% of franchisees are come from within the restaurant system. Again, managers not as quite as attractive as being a franchisee's owner, but still that's a pretty good statistic. They pay an average of $15 an hour wages. Is Chipotle going to struggle to have labor issues in this environment?
So Chipotle was a company that paid close to minimum wage in many markets, but offered you a very quick advancement path. And has had an amazing history of internal promotion. So you could go in a few years from guy in the line making very low wages to manager of a store to general manager to regional manager who makes well into the six figures. They've been really good about that. So that reputation will help them. Increasing the floor to $15 an hour will get them better candidates, it will also get them worse candidates. And that is something they have to deal with. So if you get someone who really wants to work their way up at Chipotle and is willing to take lower wages to do that, that is self-selecting. That is an advantage. It forces people to work harder. I know that's anti-labor, but it's been a strategy that has worked for them over the years. So I do think at $15 an hour, they're going to get a certain amount of people who just want to be workers, and that's fine. But they're going to have to do more work to identify who the next generation of managers is. I think they're going to have to do more with education benefits, and really continue to be, because they really have been a model place to work. They're going to have to work on continuing that, because a lot of other players are paying that. McDonald's is encouraging franchisees to pay more. McDonald's has always been a career path. Taco Bell is testing paying certain store managers, six figures. So you don't want to have like, okay, we were always the best management path, and now other people are offering that. So our mid-level people are getting poached to go run Taco Bells. So you're going to have to be very vigilant about it. But I actually think that's really baked into the company's DNA, the hard work of start at the bottom and very quickly. I mean, like, within 6 months, move up to being a shift manager and making decent wages and learning management. And I think it's an incredible advantage if you are a general manager or a regional manager to have known every aspect of that business. That's how McDonald's has historically done it. Like, you want your general manager to get the phone call saying that the shake machine doesn't work, and he's read the manual for the shake machine. He knows how that works. He's had long trainings, which I assume are led by Grimace, about how the fry machine works and all the other things. I think Chipotle has done that incredibly well. But Matt, I'll ask you, because I know you have a chart here. Is Chipotle, which is trading at Blockbuster numbers, too expensive?
Well, let's throw it up. So, so I would say yes, but it's always been too expensive. So I don't, it does well. I would also say it sounds like they have a lot of opportunity to drive up margins in each store. They have a lot of opportunity to increase sales. So, with that kind of earnings power, like that PE ratio is incredibly high for a restaurant. At the same time, I don't know if it's quote unquote too expensive. I will say, Dan, look, I think it's very hard to invest in restaurants. It's very hard for restaurants to have a real economic moat, like a competitive advantage. Like, we're talking about guilty pleasures, and I'll take any good burger joint. It doesn't have to be one specific kind, because I like burgers, and so burgers and fries and a chocolate shake, and man, you got me. It's really hard. There's only 3 restaurants I think that are really maybe investable. And we talked about 2 of them today. The other one, I'd probably throw out Starbucks. I think you would have a hard, I'm not an expert on the industry, so I'm open-minded on that. Someone can change my mind, but you'd have to convince me otherwise, like that there's another restaurant out there that's really investable. Domino's and Chipotle, they've done really well to build up a brand, to build up their digital sales infrastructure and loyalty rewards. And who else has done that? Starbucks. And that's why I think those are the 3 restaurants that I'll take as acceptable answers to invest in.
I tend to agree with you on that. And 7 investors, you've been awfully quiet. We're going to take at least one question or comment in a minute, and we're going to wrap this up with why are both of these companies succeeding. Before we do that, let me remind you that we are towards the end of July, and we are putting the finishing touches on our August recommendations. What do we do as 7 Investing Lead Advisors every month? We give you our highest conviction stock pick for that month. So we go, I like this whole bunch of companies, but here's the one I am most enthused about. I will say Matt played a major role in my pick for this month. It's something we've talked about a lot, and it's a company I've always loved, but I was very hesitant to buy it because I'm not their core customer. And while I do shop there, because there's one very convenient to me, near one of my homes, it was not a place I considered, a favorite. And Matt made it pretty clear that that's not that important. And I'll argue that about Domino's as well. I am not a Domino's customer. They do a shockingly good gluten-free pizza. So if it was 1 a.m. and I had a limited option, I probably would order from Domino's. Frankly, more so than a local pizza place's gluten-free pizza, but that's a very specific niche. I eat very little gluten, but if you see me out cheating, I do cheat. Matt and I cheat pretty regularly at a pizza place. But it is that good a pizza place that it is worth the stomach pain the next day. But if you'd like to become a 7 Investing subscriber, that is $49 a month or $399 a year. And again, I'm a long way from school, but that is about 2 months free. If you'd like to be a member, go to 7investing.com/subscribe. Bring your credit card. We do not take cryptocurrency yet. You cannot barter with us. I'd love your goat, but we can't do that. So join us at 7investing.com/subscribe. Matt, let's get to the end here.
Yes.
Why are both of these companies succeeding?
Well, I mean, we already touched on a lot of it, but like real quick, like loyalty members, 27 million for Domino's, 23 million for Chipotle. Digital sales, that represents 75% of Domino's sales, almost 50% of Chipotle sales. Like that, those are higher margin orders. Like we talked about, it's much easier to order. It's a way to automate the store. Like, look, making a burrito, it's going to be really hard for a robot or machine to make a burrito customized every single time. Making a pizza with different toppings on half on one side or something like that, that's really hard to get every time. It's hard to automate those kinds of things. What's easy to automate is what the Domino's and Chipotle have attacked with these digital sales. That's awesome. They do a fantastic job on that. And I would say those are the two biggest reasons I think they are succeeding.
Yeah, it's relentless innovation. These are companies that are always saying, how can we do it better? Do I think that the pizza more than the burrito will be made by a robot? Yeah, I do. I don't think it's that difficult. The technology exists. I've seen it at trade shows. But do I think Domino's will use that to get rid of people? No. I think people will be involved in expediting and making sure everything works and you get your order fastest and the store has what it needs and the little shaker full of red pepper is full and the little to-go containers of that are ready. Both of these companies, and I joke about it because Domino's always advertises the ridiculous end of its technology. Like, we're going to use drones. It's like, no, you're not, but you're going to find the best possible way to get me a pizza, whatever that is. And like,
Right.
We don't talk enough about how Domino's could deliver you a pizza on the beach. That's insane. The fact that they have like something like 20,000 spots that they
I think
can
I think it's 200,000.
200,000 spots.
It's hot spots. Yeah. So
Yeah,
like this is something you rolled out a couple years ago, and like you're at a park pavilion, and you might not know the address to the park, but it's called a hotspot, or you're at the beach, like you said, and you want to order some pizza or something and they have these hotspots all over the country to make it easy to order. I mean, just things like that. They always have that little extra thing that they can do better than the competition. And it seems like they're always doing that. Like we talked about with the curbside pickup, the 2-minute timer, just little innovations like that can make a lot of difference.
Yeah, the next time Matt is at a family event, like a wedding or something, I'm going to send him during the ceremony a dozen Domino's pizzas. No, I'm not, of course, going to do that. I wanted to talk about
real quick, Dan, we have a chart. So like when we talk about why these restaurants are successful, they're outperforming the market. Sam, if we have that graph, look over the last 5 years, but you can go back 10 years, and I think the difference is even more. But Chipotle and Domino's have consistently, they've more than doubled the market's returns over the last 5 years.
These companies have been incredible. I kick myself a lot that I am not an investor in either. I should have bought Chipotle during the E. coli scandal because I 100% believed and wrote about that it wasn't, nothing really bad had happened there and this company would come back. It took a long time, actually. That being said, at the time I bought it, we worked at a place where we had trading restrictions where if we talked about something, we couldn't buy it for, I think it was a couple market days before or after. And I was doing interviews on this every day. I was writing about it and talking about it. So sometimes we don't own stocks for reasons that are beyond our control because of our profession. I want to close out this topic, and then we have one more. We're going to talk about Shake Shack a little bit for about a minute after that. But I want to take the first comment from Max Lucas in a very quiet comment day from the 7 Investing Nation here. How well is automation integration going with large fast food chains? Restaurants are typically low margin, and rising wages and worker shortages seem to hurt these businesses. So it's going very well on the app side. It's going very well on the order side. There were some hiccups when McDonald's rolled out Restaurant of the Future, where people didn't really know how to use the kiosks. And I think we've largely moved past that. And consumers have realized there's no shame when you order on an app. That's a benefit. And also, if you want to be a pain in the ass, if you don't want pickles and half mayonnaise and no ketchup and whatever it is, Starbucks has actually had to deal with this, that you can customize things so ridiculously that it's difficult for their baristas to make the orders. That part they figured out. The other automation is things like you load the fry machine and then press a button and everything happens. Like you're going to see sort of like, let's call them micro automations, where it's like the McDonald's McCafe machine. It's not a barista making your coffee. It's a guy pressing the right buttons. I think you're going to see a lot of that before you see like the fully automated restaurants. Your thoughts on this, Matt?
No, I think you hit it. Like I don't have too much to add. I think the ordering and app side is where the innovation is and where you continue to see it. Like we've been talking about, I think nobody does it better than Starbucks, Domino's, and Chipotle. And like to other kind of innovation, it's going to be a lot harder and probably a lot slower getting there.
So overwhelmingly in my Twitter feed, when I threw up the question for the finisher, which we'll get to in a minute, people asked about Chick-Fil-A, and Chick-Fil-A is not public, so we don't know any of the numbers, so we can't really comment on it. But the other one they asked about was Shake Shack, and people are very vehemently fans of Shake Shack and believe it could be a good investment. I actually pretty much disagree. Now, I like Shake Shack. If you said, let's meet at the Shake Shack in Boca, which is pretty close to both of us, I think it's the only Shake Shack in the area.
There's one in Fort Lauderdale.
So right? I'd meet you at either of those because they have a gluten-free bun, it's a good burger, the ice cream is excellent, and as I said on Twitter, if I'm with our mutual friend Matt Frankel at the MGM in Baltimore, which has a Shake Shack, if we've been playing some cards, maybe had a drink or two, somewhere at 10:30, 11 o'clock at night, the idea of having an adult shake over at Shake Shack becomes really, really appealing. And I can't pretend there might not also be fries with that as our judgment wanes. But I think part of the reason Shake Shack works is it's special. I don't think Shake Shack works as a 2,000 franchise, entity. I think it might work as 500 or 600 in the US and a couple thousand globally. I think it's very much capped because the second Shake Shack is at every food court in every neighborhood, I actually think it's not that big a deal. Matt, am I missing this? Am I wrong here?
No, I don't think you are, and I like Shake Shack too, and I think that's probably why people like it so much as an investment. But it's a $4.2 billion market cap. Its valuation is very expensive, and you're getting a lot slower growth than you're seeing at Chipotle and Domino's. So like, at the end of the day, I just think like you're paying up for slower growth, like for a smaller concept. So you would think they would show faster growth. So that I would want to see that change before I change my mind as an investment.
I actually think they're very aware of what I'm talking about and that they want to be in tourist areas and destination areas. And look, spending the money to be in a major high-priced casino that has a really nice food court. Like they're the only, fast food chain that's in that food court that has things like, fresh seafood and really good Japanese and like really excellent stuff. That's intentional. They are putting Shake Shack's places where you're going to talk about that you went to Shake Shack. If all of a sudden Shake Shack's at, the mall at Boca Town Center, or here at Wellington Green or whatever, I'm not so sure it carries over. So they add, 30, 40, 50 stores a year? It's not that many. And I think that's going to be the case. Now, could they have other concepts? Could they, I really think they could do a fast food seafood concept on a high end that might give them some optionality. But I don't think it's a great investment. And please, God, don't get mad at me on Twitter. Like I like the product. I hope they succeed. I'll happily buy you a shake if I see you at a Shake Shack. But it's not something I would invest in. We have gone 15 minutes longer than I expected to today, Matt. This has been a lot of fun. But Sam Bailey, let's climb up on the top rope and hit our finisher. Which restaurant will be the best investment over the next decade? Almost 40% of you said Chipotle, 15.9% said Domino's, 15% said McDonald's, 29.6% said Starbucks. I do not think it's Chipotle. I know you don't either. Matt.
Well, I'm going to say Domino's. I was campaigning for Domino's on Twitter, and it's still almost last, barely beating McDonald's. But no, I think McDonald's. Out of those four, I'm going to pick McDonald's. That's the stock. That's the restaurant. That's the one restaurant stock I own, and I'm sticking with it for a reason.
You mean you're going to pick Domino's?
Yes, Domino's.
Yeah.
Sorry, yes, Domino's, 100%.
So I could hear your argument on Domino's. Let me make a case for Starbucks. Both Starbucks and Domino's are adding stores, but at some point they're going to max out. I think Starbucks has a massive opportunity in grocery with its partnership with Nestle that we're just seeing the beginning of. We're seeing an increase in beverage products. I just bought some Starbucks cold brew concentrate. I buy the little nitro cans all the time. I buy the low-fat double shots all the time. They're increasing that, but they have the ability to go into ice cream, to go into all sorts of coffee creamers. They have a nice selection of. They can really grow that. I also think they have a massive opportunity to grow their premium business. Adding maybe 10% of their stores, adding a premium bar with higher priced items, whiskey barrel aged coffee. I think they can expand the standalone premium store and roastery business. So I think both Starbucks and Domino's are good investments and good choices. I just think there's more optionality because Domino's has not done all that well in adding other food items. I also think, and I'll let you weigh in a second here, Starbucks has not done food well either. And maybe with the Princey Bakery, which operates out of the roasteries, maybe at some point they'll figure out a lunch or dinner menu that works. And I'm not sure the Domino's breakfast offers that much of an opportunity. Your thoughts, man?
So Starbucks is a great restaurant, so I'm not going to say too much bad about it. I would say if you were going to make a case for Chipotle, they of all of those four choices, they have the least international presence, and I think that might be a real growth driver for them that is not talked about too much when it comes to them. But they were talking about their stores in Canada. They're opening up they opened up 2 stores in England this last quarter, and they talked about like how sales were there. We're doing much better than expected. If Chipotle has an international opportunity and they have company-owned stores, that could be a huge growth driver for them in the next decade.
I actually think that is possible, but I'm going to stick to staying Starbucks.
I'm sticking to Domino's, but just throwing that out there.
If you would like to get in touch with us, you can send us an email at info@7investing.com. If you would like to reach out to us on Twitter, we are at 7investing. And as you can tell, we talk about fun stuff. We put up polls. We talk about the Noid. We have deep financial debates. Both Matt and I have put up some very long chains of tweets over the recent months. We're interactive. We love to talk to people. I actually was explaining today to someone. I did a podcast this morning for the Broadcast Retirement Network, which I do every week as a 7 Investing representative. And we were talking about Twitter earnings. And I said, FinTwit is this amazing pocket of Twitter that isn't negative, that when someone does something like toxic, that person actually gets shot down and like everybody else is supportive. Even when you disagree, it's like a very upbeat disagree. And like, I don't care if somebody disagrees with me on Shake Shack, that's awesome. But if someone's like, hey, you don't agree with me on Shake Shack, your house should burn down. Well, I don't want that. And FinTwit is the opposite of that. It really is a very supportive community. And I say this because we're going to be having a lot of guests on 7 Investing over the late summer and fall that are just some of the bigger names, some of the people out there that you know from FinTwit. Maybe you don't know the person behind it. Maybe you know the character they're playing online. We're going to put some names to faces in the coming weeks here on 7 Investing Now. You were quiet audience today, not a ton of participation, but we hope you will be back to that on Monday. Matt, I think I'm actually doing all 3 shows from home next week, which has been actually very rare. And then I get back on the road. Then I will be in Vegas. I will be in Baltimore. In September, I will be back on a cruise ship doing shows from who knows where. So it is going to stay and get busy. I think I have an August show or 2 from Davenport. Maybe you'll join me down there on Labor Day, and we'll do well, we don't do a Labor Day show, but maybe we'll tape something at that point. So there is a lot going on here in the 7 Investing world. But for Matt Cochran, for Sam Bailey behind the glass, I am Dan Klein. Enjoy the rest of your Friday. We will see you on Monday.